Hi, this is Dr. David Moffat, the coach, consultant, and owner of the Ultimate Patient Experience, and you are listening to hashtag POD Podcasts of Dentistry with Dr. Panks.
This podcast is sponsored by Rocketbook at podcastofdentistry.com/Rocketbook. I hate wasting paper, and if I could, I would not use pen and paper at all. But I love the feeling of writing with a pen and a nice paper. Somehow I feel connected to it. But I always hated the fact that I cannot bring my ideas to the digital world. Now, Rocketbook is the exact amalgamation of both the physical and the virtual world. Here's how it works. You can draw or write on the Rocketbook. Take a picture with the Rocketbook app and magically it cleans the picture and sends it to Google Drive, Evernote, Dropbox, OneDrive, OneNote, Slack, Box, iMessage, or even classic email. Just configure the symbol once. That's it. Everything goes to where you choose it to go. When done, you can use a moist paper towel and you can erase it, only to be used again, simply saving paper. Head over to podcastofdentistry.com/Rocketbook. Welcome to hashtag POD, Podcasts of Dentistry. I'm your host, Dr. Panks Dhingra. This podcast is an attempt to learn, adapt, change the mindset of dentists and the community to excel and to become the very best version of yourself. Today, we'll be talking about the dreaded taxes. They are around the corner, and I have interviewed 2 dental CPAs, Session 7 and Session 8. Session 7 is with Mr. Bilal Mehanna, and Session 8, which is this session, is with Mr. Craig Cody. For those who learned the basics of taxes with Mr. Mahanna in Session number 7, this session is like the extension of Session number 7 with Mr. Cody. Mr. Cody owns a dental firm based in New York as Craig Cody and Company, who has a partner with the same name, Craig, mainly dealing in real estate. Craig Cody has a unique story. He was a cop who turned into a CPA. You will feel really connected with Mr. Craig. He's an expert in taxes and shares his years and years of experience in handling taxes for dentists. He is an avid podcaster himself with a podcast name, The Progressive Dentist. He believes highly in long-term planning. He even has offered all our audiences to get his free published book named as 12 Biggest Tax Mistakes that cost dentists or the business owner thousands of dollars. You can get yours for free at craigcodyandcompany.com/Dr. Panks, which is CRAIG, Craig Cody, CODY, and AND, Company, COMPANY.com/Dr. Panks, PANKS. Mr. Craig Cody goes in great detail about how to reduce down your tax liabilities legally. There are some great sections in tax code which not many people take advantage of, especially dentists. He clearly believes in it's not how much you make, but how much you keep. Being a podcaster, avid learner, you will feel that you are listening to an expert, not only in taxes, but in business too. He talks about his life, his experiences, his morning rituals, his mindset about business, his mistakes in life, his advices to the younger dentists, and a lot more. I learned a lot about taxes and more, and I'm sure you will too. Let's listen to Mr. Cody. Thank you for coming in.
Thanks for having me. So you had the podcast was going and then you stopped it and now you're restarting it. Is that it?
Yes, exactly. I had started it. I launched 3 episodes. I call them sessions. Let me start bothering you let's start with your podcast. Your podcast name is The Progressive Dentist, right?
Yes, it's the Progressive Dentist podcast. Yes. And I call it that because, I looked at our dental clients and I look how we serve them, and they're always what I call progressive thinking. So, I kind of refer back to my dad's dentist who, was old style dentist. People came because they were from the neighborhood.
Right.
But he was a dentist. He wasn't a business owner.
Right.
And I look at our clients, and they're business owners.
Yeah.
And they're looking to grow their practices, multiple practices sometimes.
Yeah.
They do marketing. They are interested in other types of investments.
Yeah.
And, those are the people that we cater to as a business with my firm.
Yeah.
And we felt like, okay, let's do a podcast and cater to those same people, because there's a lot of information that we could give out, whether it's our personal knowledge or knowledge that our guests have. So I call it very progressive, and so that's where the progressive dentist comes from.
Oh, nice catchy name, to be honest. And I actually looked up into a couple of your episodes, not couple, but pretty much all of them once. Just have a look at it. You're not talking to only dentists, actually, or you're targeting dental community, but your guests are from everywhere. Am I right?
Yes. Well, because we know from working with our clients that there are other things that they want to learn about, and whether it's defined benefit plans or note investing or tax liens or leadership, or marketing and stuff like that. So I just think the more information we can put out there for people, I know I personally learn so much from listening to podcasts. So I want to put that information out there so people can learn from it and make decisions based on it.
Great. Now I read a little bit about you. For my audience who doesn't know you, you were a cop, and now you're a CPA. I mean, come on,
a little different.
Yeah, I know. But this is what I'm saying. Give them the Cliff Note version. I know there are hundreds of them who know you already, but still, just for the fun of it, how did you come from being as a cop to a CPA,
So I was always interested in. First of all, my dad was a police officer. He retired as a sergeant after 33 years in New York City.
Yeah.
So I grew up with that in the background. I also grew up in like a blue collar neighborhood where basically for the most part, I'd say 90% of the kids went on to civil service jobs. Okay, there were no doctors, there were no attorneys, there was no one even thinking about anything like that. I always wanted to work on Wall Street. I was fascinated with numbers. But part of what you did, if you lived in my neighborhood, when the civil service tests were given, you took them. That's what you did.
Yeah.
Okay. And took the test and went through the whole process. And we used to rent a car. I was away at college, and we'd rent a car to come in for our interviews and stuff like that, and take the 4-hour drive back to school and stuff like that. And after my third year, I received a call one day, and and I was like, well, you know what? At the time, I was like, sounded exciting. Let's do this. And I was thinking, if I can make $50,000 a year by the time I retire, I'll be set for life. I was a dumb kid. So I went on, and then my dream was I was going to become a chief.
Now, wait a minute. What year was this? You were thinking 50,000 a year?
This was 1984.
Okay. All right.
Okay. So now you have to understand, starting salary for me back then was $24,000.
Yeah.
I left college a year early. I used to go make that 3.5, 4-hour drive, maybe every other weekend sometimes to see my friends. And, $15 would get me through a weekend, and that was probably $10 on beer and booze and $5 on food.
Cool.
So what did I know? I didn't know anything. But, then I went through the academy and everything like that. And then I thought, okay, you know what? I want to be a chief.
Okay.
And I was promoted. It's all civil service exams up to a certain point. And I was promoted after like 4 or 5 years to sergeant, and got to do a lot of interesting things. But then depending on how civil service works, I had to wait over 10 years for the next test. So in those next 10 years, I was married, I had kids, I had a house. Things change.
Sure.
So I was my thoughts were no longer about, being a chief. My eyes were opened up a little bit, to the world. And I started to think about, okay, what do I want to do when I retire? And I fell in love with taxes, and I wanted to actually go into financial planning. And I said, well, what can I do to make myself a little bit different than the average, cop that retires and goes to work for Morgan Stanley? I said, well, let me get my CPA.
Okay.
And
so wait a minute. So your CPA came into picture just before your retirement, and isn't the retirement around 60? Or is it like? No. Oh, okay. You could do it early retirement.
You could do it early.
Okay.
And I actually didn't get my CPA till after I retired, because at the time you had to do 2 years of experience working in the firm. But I decided, let's do that. And the more I did it, the more I fell in love with it, and the more I fell in love with the planning side of it. And so I was lucky. I retired as a lieutenant. I had a great run. I worked with a lot of wonderful people, and did a lot of interesting things. And I went into another line of work that I also love.
Okay.
And I'm passionate.
Got it.
So that's the short story.
Got it. So started as in civil services, chief, retiring as lieutenant, and finally, by the time you were retiring, you got into CPA. And okay, now this is still okay. I can still digest that. Okay, but how come dental ward? I mean, who gets into dentistry? I mean, I love dentistry, but there are so many hundred things that I don't want to take care of or want to be worried about. You getting into dental ward, what prompted you to move there, and or how did you move to dental ward? Well,
we had a number of dental clients, and then we started to get, I was a guest on a lot of different podcasts and dental podcasts, and we realized that I could really help these business owners that are dentists.
Sure. Okay. That makes sense.
I could help them, number one, with tax planning, and number two, with their accounting issues. And, so, they have good numbers, and with good numbers, they can make good decisions.
Right. Okay.
So it was just kind of like a natural progression. And now we have clients all over the country.
Okay. What is your average client size?
I would say, average client size is, somewhere around $1 million. It could be, they run the gamut, honestly, to tell you the truth. They
Sure.
run the gamut, but the key is not the revenue, it's what they keep.
Right.
How much of that are they keeping? So that's always the key. It's kind of like watching your overhead, like, Mark Costas talks about, watching your overhead. How much of that can you keep versus, do I want to do 2 million and keep 500,000, or would I rather do 1 million and keep 500,000?
Sure. Essentially, that is the bottom line, right? Everything
That's
else.
Right.
If my office is $1 million and I am only able to keep 200,000, I just get there's 80% overhead. That just loses everything. I mean, why am I working so hard?
Exactly.
That's completely agreeable. Now, what kind of clients are under your belt? And that's the reason I'm asking is because I'm in touch with so many people, who have one office versus 10 offices versus, and everything in between. Maybe we want to know how much you can help. And what kind of people or what kind of DSO or groups that you're able to help out?
So we have clients that run from one office to 5 offices.
Okay.
And grow.
Okay.
So, and I have a team here. My number 2, his name also happens to be Craig. His expertise is in real estate. He has like 15 years in the big New York City real estate CPA firm. So that helps us, because what does the dentist owner want to do? He wants to own a building.
Right.
Okay.
Yeah.
And how can we, help him not only own a building, but use it to generate, tax-free income for him?
Right. Right.
So that's one of the areas of expertise that we have. But for me, it's all about planning. Whereas most dentists, most CPAs do a really good job, but they're putting the right numbers in the right boxes, and they don't think what I consider, outside the box. What can we do a little bit differently that's going to save you money?
Well, I think this is a really good topic. I'm glad you're talking about planning. And I even listened to a couple of your episodes on your podcast. And one of them, you clearly talked about planning. And now, I don't even know anything about taxes. I don't even know what planning should I be looking at. So what homework could my audience, whether they're dentists, new dentists especially, could they do before even they come to you for planning? You see what I'm saying? They don't even know what questions to ask themselves, what questions to ask you.
Right. So I actually wrote a book. It's called The 12 Biggest Tax Mistakes That Cost Dentists Thousands.
Cool.
And they could reach out to us, and we'll give you a link, which will be craigcodyandcompany.com/Dr. Panks.
Okay.
And you could also put a link on your show notes and stuff where they could actually request a free paper copy of the book.
Okay.
And I'm also on LinkedIn.
Yes.
And we send a free copy of the book, and you read the book, and you could see, and then you could have that conversation with your CPA. Okay.
Yeah.
And hopefully when they talk to him, he doesn't have that glazed over look in his eyes that doesn't really know what you're talking about. Planning, planning is, telling you how much tax you need to pay in December, January.
Right.
So to learn about planning, obviously listening to the podcast, reading the book, it's an easy read. And then you have some ideas, and you can go back and speak with your CPA about the ideas and see what you need to do to implement them.
Got it. But what are the initial generic questions that they can start thinking before they can even get the hold on the book?
Well, general questions are, am I operating out of the right type of entity? All right.
Okay.
Am I an LLC? Should I be an LLC? Should I be a corporation? Should I be an S corporation? What everybody's situation is a little bit different.
Right.
So it's not, it's definitely not one, just because you're a dentist doesn't mean you should be an S corp.
Right.
And typically what happens is that the entity is chosen because, the attorney says, form an LLC because it gives you the best protection.
Right.
But, very rarely is there a conversation between the CPA and the attorney to figure out what is best.
Makes sense. And what are the most common, you've got clients all over the country.
Yeah.
What are the, most of the time, what are dental companies or dental offices they're established as? Are they established as LLC, C Corp, S Corp? What do you think?
They're typically either an LLC, partnership, or an S Corp. And is not I can't say it's a third. It's not any of those. What they typically are not are C corporations, which is basically a separately taxed entity. That's typically not what they are.
Okay.
So they run the gamut, okay, and there's reasons for them to be different things.
Okay. So I obviously don't know anything about it. It's more like, do you plan about LLC or S corp before you establish the office, or even if you have established as LLC right now, and your planning stage says, I think you would benefit more with an S corp. Could they change it after, X number of years?
Yes, they can make that election to change it, and if they do it correctly, they could actually make a retroactive election.
Okay, so that's not a big deal.
Right.
It's just a paperwork kind of thing?
It's just it's typically just filing paperwork with the IRS and sometimes the state, depending on what state they're in. Okay. But the key is if you need to do it retroactively to do it right. So maybe it's now and we want to make it retroactive to January 1st.
Right. Okay. I understand. All right. So what else can they learn from you? You've got everything about tax planning, but do they come to you at the end of the year, the beginning of the year? somebody who has no knowledge about it, so especially the new dentists, new graduates who came out 3 years, 5 years from the dental school.
Right. So we have people that come to us in the beginning of the year because, they're not sure and they're not sure what they should be doing and they want to get it straight right. And then we have people that, this is typically a very busy time of the year where people have been thinking about it. Okay. But, they're busy. They have a busy practice. They have a busy life, and now they know, okay, well, I need to do something. And it's November.
Right.
Okay. So they'll come to us now, and at that point, it's typically like, okay, I need to. I'm not in a panic, but I'm close to getting in a panic because I know time is running out.
Yeah. Right. Okay. And I know you keep talking about there are the tips and tricks for the owner dentist to reduce down their tax liability and keep more in their pocket. But do you have obviously legal tips and tricks that can be used by associates also? Well,
if an associate is a W-2 wage earner, there's really not a lot, especially with tax reform, the deductions have kind of gone away. There's not a whole lot that can be done there.
Okay.
All right.
Okay.
There are some people that can legally pay an associate as a 1099 independent contractor, okay, and then that opens them up to the same opportunities that the business owner would have.
Right.
So depending on how they're set up, but there are rules when it comes to what is an independent contractor and what is a W-2 employee.
Yeah, I think that's a little shady. That's my understanding.
Yes, it's not. I would not consider that a good planning technique to make somebody an independent contractor so that they can write off more stuff because, ultimately what happens is somebody's feelings get hurt down the road and they make a complaint and the dentist owner winds up paying a bunch of taxes and penalties.
Got it. So keep away from 1099.
Yeah, it's very hard to qualify as a 1099.
Yeah, and for W-2, there is not a whole lot that you can potentially offer. I mean,
yes.
you can certainly do the taxes for them, just filing the taxes for 1 year, 2 years, whatever. But probably you cannot give them any additional planning.
There's not a whole lot that they can do with the tax reform. Basically, what they would have had in the past was unreimbursed employee expenses are no longer deductible.
Okay.
So. It's not usually a worthwhile endeavor.
Okay, fair enough. Now, what else do you deal with? I think you were talking about a lot of things about taking advantage of Section 199? I don't know.
Yeah, Section 199 is the new 20% qualified business income deduction. And as it relates to dentists, it's specified service. So professionals are limited with that deduction, and as their income, their taxable income, and the key is taxable income, goes from $315,000 to $415,000 for a married filer. That 20% deduction phases out. So what can you do to get them under that? And, some of those things could be a retirement plan. It could be a home office deduction, and that home office could include your home athletic facility, which might be your gym or your pool.
Okay.
What type of business entity you're in. Are you able to hire your kids? Tax court says you could hire your kids as young as 7. And typically, if you could justify paying a 7-year-old, I think it's a little tough to justify paying them $12,000 a year. But if you were able to justify that, that $12,000 a year would basically give you a deduction for $12,000, and they would pay no tax on that.
Oh well, so you're saying I can hire my 7-year-old kid, or whoever can, and still take a deduction of whatever you pay them?
Right, so you get a deduction because they're paid salary like anybody else.
But hire them for what? I'm sorry, but
Well, that's exactly what is your 7-year-old going to do? I mean, your 16-year-old could do a lot.
Yeah.
Your 12-year-old can do a lot, but it's tough. 7-year-old. What can he do? Some people, they use him for photos and stuff like that. It has to be reasonable compensation. All right.
Okay.
And you need to document what they're doing. So if somebody asks, you have everything documented. And the key to planning is getting things documented. And that's why we hold our clients' hands. We do a monthly call with our clients to make sure they're doing everything we tell them they're doing and make sure everything is documented.
Got it. Interesting. Well, I did not know that you could hire your own kid and still pay him. And interesting. That is interesting.
Yes.
Anything else interesting, in dental world which people don't know about?
Oh, I mean, one of my favorite things is the home office, which leads to the home athletic facility, which leads to the gym, okay, or the pool. And
how is that involved? Like, how is that deduction possible? What are we telling the IRS as a matter of fact? That I'm using a gym at my home, so you should pay.
Right.
Give me a deduction.
Well, no, you have to have a gym you have to have a home office, number one, and you have to spend about 15 hours a week doing work there, which most business owners, period, do. And then that athletic facility needs to be available for the owner, their employees, and their spouse. All right.
Okay.
That doesn't mean that they all have to go there, but it just has to be available. Okay. So I don't know, maybe your staff likes you, but they don't like you that much. All right. And then those expenses become deductible. So whether it's the cost of the equipment or depreciation on the pool or whatever, and that can turn into a nice little deduction, as well as, now your commute from one office to another is deductible, whereas a commute's not deductible, but if you're traveling from one office to another office, it is deductible.
Right. Okay. That makes sense. So if I have two offices, I'm going back and forth between the two, and would the gas mileage be deductible? Is that what you're saying?
Well, it depends on whether you use the mileage rate or use the the percentage of use rate. But yes, it would be. So if you're driving that car and most of your travel is from one office to the other, let's just say it's 75%, then you get to write off 75% of the expenses associated with that vehicle.
Okay, that makes sense. And then you said, now coming back to the gym part again. Would that deduction be every year or the first time when I'm actually making my own gym in the office?
No, it would be every year.
Oh, really?
Every year.
And is there a cap limit to it?
It's capped on basically what your actual costs are.
Okay.
And we typically set up our clients with what we call an accountability plan, so that allows them to deduct those expenses, and they write themselves a check every month. But no, there is no cap.
Okay. All right. That's interesting. What else is interesting like that? I mean, nobody would have thought about it. So a home office, car, I've heard about the car thing. And what else? And you said the gym.
Yeah. How about, depreciation, amortization of goodwill when you purchase it? I can't tell you how many times I've looked at, books where clients go to a CPA once a year, and they see them at the busiest time of the year, and they paid X for the practice, and they don't have any goodwill on the books, and they're not amortizing the cost of that over time. And then something else I like is called a cost segregation study, and that's when, and we just did a short solo cast on my podcast on this, and that's when you own the building that you operate your business out of.
Okay.
And you have a firm come in, and they do a study, and typically a commercial premise is depreciated and written off over 39 years, and they break the property out in that building over, some is 39 years, some is 15 years, and some is 5 years.
Okay.
And a lot of times, we just recently did one where, we wound up taking 36% of the value of that building was broken out into 5-year property. So the client got this big, huge write-off the year we did the study. And he saved about $75,000 in taxes.
Interesting. But this is only applicable to if you own the property. What about somebody, somebody who's leasing the offices? Like, is there anything for that too?
No, just obviously to make sure you are writing off that equipment that you're purchasing.
Okay.
Or leasing. Yeah.
And I keep hearing, every year by this time, these dental companies, Henry Schein and whatnot, Patterson, they start coming to us. Why don't you buy blah, blah, blah scanner or CVCT and write it off, for the year? Is that a good strategy for the dentist to begin with?
It's a great strategy if you need the equipment.
Okay.
If you don't need the equipment, you're saying, okay, I'm going to part with $100,000 to save $35,000.
Right.
I'd rather keep the 100 and pay the 35 in tax. I'm still net 65. So if you need the equipment, yes, it makes sense. And does it make sense to purchase it in this year versus January? Well, if you're going to get it, you might as well get it this year and use the deduction for this year. But just don't buy equipment for a deduction.
Okay. And how much impact does it happen? Does it have on such a deduction on the total tax bracket?
It can have a huge impact, between your state and city, or your state, city, and federal rates. It could, depending on what state you live in. Mm-hmm. If you live in California, you could be in the 50% bracket between federal and state. So if you bought that $100,000 piece of equipment that you needed, all right, you saved $50,000 in tax. So that equipment really cost you $50,000.
Makes sense. And then obviously, in a couple of years, if you have to sell away the equipment, even if you sell it for like $40,000, $50,000, you got your money back in a way.
Correct.
Makes sense. Okay, that's interesting. And I was also looking at one of those articles on your website talking about that we could even get deduction for our soccer cleats and private schooling for the school, for the patients, or like for the kids.
So let's look at it this way.
Okay.
Little Johnny's 13 and he's on a soccer team.
Okay.
Well, let's make it an expensive one like hockey, because hockey tends to be a little bit more expensive than soccer.
Sure.
So let's just say it costs $500 a month for him to be on the team or his practices, lessons.
What about lessons in a private setup, not in the school, but a private coach?
If you're paying for them, so if you pay for it out of pocket, you don't get to deduct that. All right.
Okay.
But let's just say Johnny's doing work in the office, and you're paying him $500 a month.
Right.
And he takes that $500 and he puts it in his bank account, and then he pays for his lessons. So you in effect have made those lessons tax deductible.
Oh, okay. I get it. So my kid needs a course. He's working with me, right? He or she is working with me, and then I pay him $500 a month or $1,000, whatever, and he or she is actually paying for all the private classes, which can be deducted in my taxes. Is that what you're saying?
No, they're deducted on. They would basically, you would deduct his salary.
Yes.
So you would get a deduction.
Right.
And then he would not get a deduction for paying for his lessons.
Okay.
But he'd have no taxable income.
Right.
So he wouldn't need a deduction.
So
in effect, you wind up getting the deduction.
Right, because he's not paying any taxes on it. Makes sense. Okay. Oh, interesting. And what about the medical costs? You were talking about the medical costs too. How can we bring that down?
So depending on what the medical costs are, and hopefully you don't have medical costs, and with our client base, it's typically not in the dentist that we see this, but the big medical expenses are people get to be a little older and they need maybe full mouth implants, and we're talking $25,000, $50,000, whatever the number is, and they could either pay that with after tax money, or if they set up, depending on the type of entity they have, or if they're a business owner, we kind of set up maybe a new entity for them, and they create what we call a medical expense reimbursement plan. So they wind up being able to write off the cost of those medical expenses.
Oh, okay. That's interesting.
Yes. So it doesn't really affect the dentist so much because, the dentist is not typically paying for those implants.
Yeah.
But the average business owner out there that, somebody in his family, him or his spouse, need to have some serious dental work done that is typically not covered by insurance, that's a way to make it tax deductible, because most people, their medical expenses are only deductible in excess of, let's just say, 7 or 10% of their adjusted gross income. So the guy that's making $150,000, all right, he's got, let's just say, his first $15,000 in medical expenses are not deductible.
Right.
And even if he spent $25,000 on, implants, so 10 of it becomes deductible. Depending on his mortgage and stuff like that, he may get no benefit anyway. Whereas if he had a business and he set up a medical expense reimbursement plan, that would become deductible.
Oh, okay. Now, one more thing which I learned listening to a couple of your podcasts is the passive income. What are your thoughts about passive income, and what are dentists or your guests, I should say, on your podcast, the Progressive Dentist, are doing to make that extra passive income?
So they do kind of cover the gamut of different types of passive investments where we have people that like to buy tax lien certificates. Obviously, a lot of people.
Ted Thomas, right? Isn't
Ted
that
Thomas? Exactly.
Yeah. I listened to that podcast episode. It was interesting.
Yes, he's kind of the king of that, and and then there's those that like to buy notes. So whether they're underperforming notes that banks sell off to investment firms, and they in turn sell off. So we had Tom Dunkel on one of our first episodes, and he's in the note business.
Okay.
Those are passive investments. Obviously, there's real estate.
Right.
We had David Phelps on. We talked about that. Everybody's buying real estate. I think real estate right now is very tough because, everybody's an expert. Okay? Right now, everybody's an expert until the next crash. And the thing that most dentists typically don't realize at first is that those losses that you get from passive investments don't offset your other income. Passive income gets offset by passive losses, but your regular income does not get offset by passive income. For the most part, the typical dentist is making enough money that he does not get the benefit of that.
Oh, so you're trying to say the passive income is not a huge part of their total earning?
No, what I'm saying is if you're making $100,000 a year and you have passive losses, the government says you could take up to $25,000 of those passive losses against your, say, W-2 income.
Okay.
But as your income increases to around, I think the number is around 150 now, you don't get to offset losses from passive activities against your W-2 income or your K-1 income.
Got it.
So as you make more money, the government says, no, you can't do that. So you need passive income to offset passive losses.
Got it. And now, I personally never understood the concept of, real estate being a passive income, because my understanding is if somebody buys a property, real estate for $100,000, let's say, right, and he gets 25 years to pay off with 5% basic bare minimum interest, right?
Right.
30 years later, the value doesn't really rise to, I don't know, 500,000 for that 100,000 property. You see what I'm saying? Plus, it would have risen, but not that much. Do you think it's still, I don't understand the concept why people invest in the property and consider it to be a passive income in the long run.
So, and I'll tell you what I call a sad story. It was my own story.
Okay.
1987, I bought a one-bedroom co-op in Manhattan for $106,000. I sold it a few years later for $125,000, and I guess about 20 years later, it was sold for $565,000.
Wow.
So that makes me very sad.
Sure,
Okay?
sure.
But most people, what happens is if you have real estate, you're not only you have the appreciation on the real estate, but your rents are helping to pay down your mortgage.
Okay.
So if the time comes when you start to sell that property off, you may have paid $100,000 for it. Maybe your mortgage is now $25,000. So you only owe $25,000 when you sell it, and maybe you're lucky enough to sell it for $150,000 or $200,000, depending on where you are, how long you've held it.
Yeah.
So that's the beauty of real estate, and at the same time, the beauty of real estate is you get depreciation as an expense, which is a non-cash expense, meaning most expenses we incur, we have to pay for. We have to take money out of our wallet to pay for.
Yeah.
Depreciation, we don't have to. It's not a cash expense. It's just it's a non-cash expense. It just happens. Let's just say it gets recorded.
Okay.
But we're not losing money from our wallet.
Oh, okay. So ultimately, it depends on where your property is, and is the property really climbing in, 2, 3, 5 years? Because that's where you will make the most money, if at all. Because if you're holding the property for 30 years, there's a depreciation on it, and the rise in the prices of the property won't be that much. Maybe the property would sell it for a dud. I mean, I'm just saying.
Oh, I will say, and I've been doing this for almost 20 years now.
Yeah.
I don't know if I've ever seen anyone that's held a property for an extended period of time that has made a bad decision.
Okay.
Historically, buying and holding real estate wins out. Right?
Okay.
Now, can you make more profit over the short term? Maybe you can, but I haven't seen anyone that's held it and 20, 30 years later sold it and has not done well.
Okay, so you're saying that it does.
Real estate typically appreciates, and you're at the same time you're paying off the mortgage. Now, obviously, depending on where it is, as location.
Sure, got it. All right, so there's a lot of stuff that we can learn and talk about it forever, but I'm not so well versed about it. I think I'll tell my audience to reach out to you and discuss more in detail about it. But in the meanwhile, as I said, let's switch gears and talk to you about some questions which I love to ask pretty much all my guests. They're Tim Ferriss inspired questions, I call them. All right. And you can take as much time as you want. You could be as quick as you want replying them. But if you're okay, let's start with that.
Sure.
So what is your morning ritual before you go to work?
In the last 9 months, my morning ritual has changed drastically.
Okay.
In December of last year, we got 2 Bernese Mountain Dogs puppies.
Great. They're awesome puppies.
Yes. My kids are all grown, fortunately. So they've disrupted my morning routine.
Okay.
So where I used to do, I would not call it meditation, but some quiet time and a little bit of journaling. Now basically I go for a morning walk with them.
Okay.
All right.
Okay.
And that's what my routine has, Now, I would imagine in a year or two, I will get back to my old routine, but it's been a little disrupted, in the last 9 months.
I don't think so. I have a golden retriever myself. I've had it for 6 years now, and believe me, that routine which is already disrupted will stay disrupted now. Because they will want to go out, you got to take them out, you got to walk them, you got to run with them, otherwise they get bored and they have those puppy eyes,
Yes.
Yeah,
big mushes.
They big bushes. Yeah, maybe you should send some pictures for my audience. We'd love to see them. Right?
I will. They are beautiful dogs. I will definitely do that.
Yeah, people connect with dogs. I mean, I love dogs. If I could, I would come to you and play with your dogs all day. So a little bit about journaling. What do you do? Is there a specific process that you have for writing the journal, or just whatever comes in your mind?
I would just do whatever comes to my mind, and a lot of times it was what I was thinking about, what I wanted to get accomplished, just kind of trying to have a brain dump,
right?
Just to be able to start my day, from almost like an empty spot.
Okay.
Sometimes it worked, sometimes it didn't. The day in the life of a business person can, change pretty rapidly.
Completely agree. And then is your journaling based on your what's going on in your mind personally, or only pertaining to the business, or everything?
Everything it would be whatever I was thinking about.
Okay, good, makes sense. Do you write it down, pen, paper kind of thing, or?
Yes. No, I used to write it down. I used to have a marble notebook, and I just write it down, and it was just there. And I felt it made me more productive. It also made me, continue to see the important things in life. If my son's my oldest, he's actually a New York City police sergeant.
Cool.
So if I was, if he was coming for dinner, or I was going into the city to see him or something like that, I would kind of just, it just keeps you, I felt it kept me, in a stable spot.
Grounded.
Grounded is the right word. Correct.
Yeah, I think, yeah. It does help me too. What I do at the end of the day, okay, maybe not every day, but for most part, I have, personally speaking, I have a Google form, which I've created as a journal. Okay. And there are certain things which I'm following every day. And that, like, for example, I need to exercise, I need to meditate. Whether I do it or not, that's a different story, but at least that's in my journal, right?
Right.
And I click yes, no, write it down, how that goes. And the beautiful thing is, I'll be happy to share it someday on YouTube, how it works. But the beautiful thing is, all the results actually go into an Excel sheet, right? And what I've been able to do, because I'm a very logical guy, maybe not as good with numbers as you probably, but I want to see a number that gives me a sense of whether I'm really feeling good about that day or not. So I have given points to each exercise that I do, and at the end, it calculates total and gives me a percentage. That gives me a good idea about how my day actually went. And I have on my own calendar every week that I go through the last week's diary or the last week's journal. That's my way of kind of going through it again and emphasizing and changing myself just a teeny bit every day.
Wow, that's so you're tracking your journaling, which is interesting.
Yeah, basically, and I don't, and I have it on every Sunday. I don't work on Sundays, right? Nobody does, but sometimes I'm off on Wednesdays, and if I was busy on Sunday for a gathering or whatnot, then I have a reminder, a second reminder. Hey, did you do your journal tracking basically on Sunday or not? Basically, it reminds me at 2 o'clock, 3 o'clock, because that's when I'm free. And then I go ahead and kind of read through that journal for the last week.
Nice. That's a good idea.
Mm-hmm. So anyways, another question is, what is the best purchase that you made between $100 to $300 that impacted your life in a very positive way?
That's a really tough question. All right.
I know. Yep.
For a number of reasons, and something in a $100 to $300 range is
okay.
Also
Forget the number.
A bit tougher. But I thought about the question, and as crazy as it sounds, it's the wireless headphones.
Great. Okay.
Which I always hated to have that connection to the phone.
Right.
And, wireless headphones allow me to listen to a podcast, listen to music, listen to an audiobook while I'm, out walking or whatever it is that I'm doing. So, I like to read. I like to now it's more listening.
Okay.
There's so much information out there that,
Yep.
you can learn so much. And there's so many different podcasts and, people, and I'll listen to, industry specific podcasts because you could always learn different things.
Yeah, I am with you. I like that too. Now, before we forget it, now, what kind of wireless headphone do you have?
I use the, it's funny because
Doesn't matter.
my kids would just tell me I need to kind of get with the program because I have a pair of Beats wireless, it's kind of like that string wire
Okay.
headphones, and my girls who are 24 and 26 were like, you need to, you just use the regular earbuds.
Okay.
I still like that little wire, so I know I won't lose them.
Me too. I've tried so many of them. If you would have asked me the same question, I would have said my wireless headphones too. I actually made 2 purchases recently. They're cheap. You can just play with them. You don't like them. If you lose them, you don't feel bad about it. I just bought like $20, $30 worth, and I have one attached to everything. There's one which works with my Chromebook. There's one which works with my TV. I've got all strewed around my home, and I would have said the same thing that impacted me positively. I can talk whenever, I can drive. Even when I'm driving, I can talk very comfortably and everybody is happy. Yes. So I'm all up for it, for the wireless headphones. You said you listen to other podcasts. What other podcasts that you listen to? So,
and they, it's funny, they change on a fairly, regular basis.
Yeah. So, I don't know if you know Dr. Kirk from Business of Dentistry podcast. He said the same thing. It changes. It changes for everybody, because it's just a phase of life, I think.
Yes, exactly. So I listen to, probably the longest podcast I've listened to is Onward Nation with Stephen Wessner.
Okay.
I listen to the Jocko podcast. I find that very entertaining.
Yeah, Jocko Link. Yeah.
The Marketing School podcast, which is nice and short. I think it's specifically made for accountants who have, for me, 5 minutes is wonderful. There's a guy named John Nemo.
Okay.
He's a character. I like to listen to his podcasts. Have you ever heard of The Land Geek?
No.
The Art of Passive Income. I listen to his all the time.
Okay, Art of Passive Income. Okay, I think I've heard the name though. Yeah.
And that's, those are probably the ones that are staples.
Okay.
And then depending on what I'm interested in at that period, I might be listening to other podcasts, and I might listen to a couple episodes here and then move on to something else. Or, obviously you're listening to a podcast and they have a guest on and you say, that's interesting, and you listen to that. Right.
Okay.
My son is a big Joe Rogan,
me too,
podcast fan, but it's way too long for me.
Well, I think if you're interested in politics, which I'm not, by the way, then you should listen to one of his latest episodes with Edward Snowden.
Yeah, actually, it's funny because my son, he was over for dinner 2 nights ago, and that's exactly what he said. You should listen to that podcast.
I'm presently listening to that. So, and honestly, I started listening to Joe Rogan because of Elon Musk. I like his attitude of handling the startups in a way. So, and he's very persistent is the key word, I believe, to do what he wants to do. And then that was on Joe Rogan's podcast, and that's how I started on, Joe Rogan.
Okay,
personally.
Interesting.
Yeah. What was the first one you talked about, Stephen
Wessner? It's called Onward Nation.
Onward Nation. Okay.
Yeah, and I've actually been a guest on there 3 times. He's
cool.
He's getting close to having 1,000 episodes.
1,000?
1,000 episodes. Yeah, he's been on for probably around 4 years or more.
Oh, okay. Wow.
He typically interviews various business owners and stuff like that.
Interesting. Are you reading any books, or you're going more into Audible or podcasting?
Mostly, typically, I read books are for pleasure.
Okay.
I just started listening on Audible to Rocket Fuel by Gino Wickman.
Okay, yeah.
The author of Traction.
Yeah. Traction, I've heard good things about Traction.
Traction is, we work with a Traction in, what do they call them? Not an instigator, a facilitator.
Yeah.
And I started reading Rocket Fuel, and it goes into the difference between the visionary and the integrator.
Yes, interceptor. Is it? No, integrator.
Integrator.
Yeah, you're right. You're right. I think I read a little bit about it. Somebody recommended to me too. That must be interesting. I haven't read the whole thing, but yes.
Kind of like the yin and the yang. The visionary likes to do certain things, and the integrator likes to do the other things.
What do you think you are?
Oh, I'm definitely a visionary. Definitely a visionary.
Yeah. Any specific quote that inspires you or that you follow? Any ideology that works for you?
Well, I like, it's kind of my quote is I like Richard Branson, and when he talks about training people well enough so they can leave, but you treat them well enough so they don't want to leave.
Okay.
So that's a quote that I like, and
okay.
I guess there's a number of people out there that I consider mentors. Okay, whether they know it or not. And I would say Stephen Wessner over at Predictive ROI is somebody that I would consider a mentor. I've learned a lot from him. Okay. He's the host of Onward Nation.
Yeah.
That's because he shares so much information. But I think I've worked with a number of coaches over the year, and I'm working with a Traction person right now, facilitator.
Okay. Yeah.
I think I haven't seen anybody in business that's worked with a coach that hasn't reaped some tremendous benefits. That being said, I also believe right now, everybody's a coach out there, so you have to be very careful.
That's true. Now, what have your experience been in the past with the coaches, and would you be interested to share your experiences with one or many of them?
Oh yeah, well, I think my first coach helped me 20x my business. So forever indebted to him, and I learned to run my practice in a certain way.
Okay.
So provide services in a certain way, and grow our business, and really comes down to providing value. Don't compete on price, compete on value.
Would you be willing to share the name of the coach?
Oh yeah, his name is Ed Lyons.
Ed Lyons.
Yeah, and he's really he works in the accounting industry.
Okay, so he's an accounting coach. Okay.
Yes, exactly.
Sense. Okay. All right. Who else did you end up reaching out to? Who was your mentor, coach, apart from Stephen Wessner, obviously?
Oh, currently I'm working with a facilitator for the Traction program, and her name is Catherine Brown.
Okay.
And we've been working with her just over a year now, and that's been great. And it's all about processes and systems, and getting everybody knowing what their jobs are and stuff like that. Spending more time working on your business versus putting out fires.
Got it. So she's again trying to help you make processes for your own accounting firm. Am I correct? Okay.
Correct.
Okay, that makes sense. Great. Thank you for sharing that, because some people don't want to share it for many reasons, for whatever reasons. But thank you for sharing.
Oh, no problem.
When you think of a person being successful, who is the second person that comes to mind? Or let me make it easier for you. What is your definition of success?
I think success is not about money. It's not about business. It's about life. It's about family. So when I think of success, I think of my dad, my mom. My dad came from nothing, got into, in 1959, was able to get into the police department under some special program for like underprivileged kids or something like that, and went on to have a long, illustrious career. Loved what he did. Raised 3 kids. We never wanted for anything.
Sure.
So, a lot of love in the house. So I think that's success. I think we all know plenty of people out there that have loads of money but are miserable.
Sure.
It's all about the family, if you ask me. That's what real success is.
Okay, great. So obviously, your family, your father, your mother, are the people that come into your mind about, successful. Who else do you think is successful in life, maybe business-wise, maybe on a similar thought, another family-oriented wise?
Well, I hate to throw in my brother into the mix, but as I said, I come from a place where you basically went into civil service, and probably 90% of us went into civil service. And my brother was one of those that broke the mold and went into having his own business. And he was the inspiration for me ultimately to have my own business.
Great, interesting. Sometimes you just need a little push, and it seems like if he can do it, maybe he's my brother. I can do it too, right?
It took me almost 20 years after him, but yes. But when you come from an area where that's what you do, and it's kind of like nobody was a doctor, nobody was an attorney, nobody was a professional.
What was the hardest phase for you to move from being in civil services to becoming a CPA, and then expanding your firm, your CPA firm, to where you are right now? What was the hardest thing that you had to face?
So I think the hardest thing I had to face was not making the transition, because it was such an odd transition. Everybody was interested in hearing the story and thought it was amazing.
Okay.
I think one of the harder transitions was when I was much younger, and I was in the police department, and I was dating my wife, and she came from a different world, and she was in the business world.
Yeah.
And she was surrounded by people who had a totally different view of a cop, and what that person was like. So it was like a clash of two different worlds.
Yeah.
Seeing that for the first time was kind of eye-opening. So that was probably the toughest transition, going from my lifestyle, which was not very different than my wife's lifestyle, but you have groups of friends that, possibly, thought differently of what,
Yeah, I understand. I think it's there were two different domains, two different worlds coming together, and then still surviving and making it all work for the whole family, along with the successes that you achieved until now.
Correct.
Makes sense. That's a tough one. Well, if you could go back in your career or life and change one decision, what would that be?
That's a really hard decision, because, everything kind of worked out, so I don't know what I would change. But
okay.
As a younger person, when I sold my place in Manhattan and I moved out to the suburbs, I moved about, let's just say, 58 miles outside of Manhattan.
Okay.
And that lasted for 3 or 4 years, and then I moved much closer to Manhattan. So that was, if I had to do something differently, I wouldn't have gone that far out for the land and the space and stuff like that. It's nice from my perspective, it's nice being close to Manhattan.
Okay.
It's nice, there's a lot going on. And that extra 30 miles, and we're talking about 30 miles New York traffic.
Yeah.
Not.
Yeah, not on the suburbs, right?
Correct. It might be in the suburbs, but there's, I dropped my daughter at the airport last night, and it took us an hour and 15 minutes to go about 15 miles. So when you add that kind of mileage on, it can add to a lot of time. So if I had to change something, I would not have gone that far out.
And stayed in the city, stayed in Manhattan.
And I would have stayed closer to the city.
Got it. Any advice to younger dentists who are graduating in next 3 to 5 years or have graduated for the last 3 to 5 years, what they could do to be more successful in the dental world? Oh,
I think find a mentor, listen to podcasts, go to continuing ed, talk to people, don't leave yourself in a vacuum. If you can work with a coach, if you have your own practice, why reinvent the wheel when somebody else can show you what's already been done?
Mm-hmm.
So those would be my recommendations to a young dentist. Find a mentor.
Where do you think, when they're just graduated, where could they find some great mentors?
Just listen to podcasts. There's plenty of them out there.
Okay. Got it. Any advice to younger self? Any advice to yourself? What would you?
Advice to my younger self. I think follow your dreams. Follow your dreams.
Okay.
If you're doing what you love, hopefully the money will follow. You'll figure a way out. There's so much talk about debt and dental school debt, and
yeah.
If it's what you really want to do, figure out a way out to do it.
Got it. I know we have been talking for such a while, but I'll try to wrap it up quickly. But what is one habit that you think that makes you successful?
I think the fact that, I'm going to say there's two habits. Number one is I'm continuously learning. All right. Whether it's my craft, whether it's marketing, self-reflection, I'm continuously learning. And being able to communicate with people.
Okay.
I think, and that's something I took away from the police department. I might have been talking to some corporate chieftain one day, or I might have been, maybe this is not politically correct, but I might have been in the ghetto somewhere, speaking with some, impoverished person that, was trying to just, make it through the day. Okay.
Right.
But being able to communicate with people across all walks of life has taught me how to communicate with people in my practice and clients and prospects and, colleagues.
Great. Thank you. No, that helps a lot. Now, where could our audience find you?
So my website is craigcodyandcompany.com. And if you go to craigcodyandcompany.com/podcast is my podcast. And if they go to craigcodyandcompany.com/Dr. Panks, they will see a link where they could request a free copy of my book, which is the 12 biggest tax mistakes that cost dentists thousands.
Oh, thank you. I'm sure audience would really like to learn that. As a matter of fact, I should be the first one getting that copy.
Yes, you should. You should.
Right. Any final parting advice to or say to our audience?
Just, I think it's important. I come from obviously the tax and accounting and the planning field, and I think it's important to know your numbers and have good numbers. So, planning, knowing your numbers makes you, be able to make better decisions and making better decisions makes your business, more profitable.
Thank you.
Seems like this would be a good time to wrap it up. Thank you for your time, Mr. Cody. I hope to talk to you soon. Would you like to get a really small email a couple times a month to see what hashtag POD is up to? What are we reading? What are we listening to? What are we doing? What's stupid, funny, entertaining, and some weird stuff that we've gotten ourselves into? Then go to podcastsofdentistry.com/extra. EXTRA. That's right, podcastsofdentistry.com/extra. And you will get a really small email from us to give you that little extra kick and keep you busy exploring the world we travel. You can also find us on Facebook at podcastsofdentistry.com/Facebook. Thank you for listening. #POD. And I'll see you inside.